So you're here because you want to get straight to the heart of things, right? Cut through the noise, understand the core ideas without drowning in jargon.
Exactly. And that's what we aim to do. We take the source material you give us, unpack it, and lay out the must-knows.
And today we've got quite a stack. We're diving into Just Dial Limited, specifically their financial results for the quarter and the full year ending March 31st, 2025.
Yep, we've got the press release, the audited financials themselves, the auditor's report, always important in investor presentation, and even an FAQ doc. Quite comprehensive.
It really is. So our mission today: make sense of it all, give you a clear picture of Just Dial's recent performance, where they might be heading, and maybe uncover a few interesting nuggets along the way.
Sounds good. Where should we start? The Q4 highlights, maybe?
Yeah, let's do that. What jumped out first from the fourth quarter numbers?
Okay, well, operating revenue hit 289.2 crores. That's up 7% compared to the same quarter last year. Solid growth.
7%. Okay, decent. But I hear the profitability was maybe the bigger story.
Absolutely. Their EBITDA, that's earnings before interest, taxes, depreciation, and amortization, was 86.1 crores. Now, that's up nearly 22% year on year.
Wow. 22% jump in EBITDA on 7% revenue growth. That means margins improved quite a bit.
Exactly. The EBITDA margin landed at 29.8%. Let's just call it nearly 30%. That's a boost of 363 basis points compared to last year.
Almost 30% margin. That feels pretty healthy, doesn't it?
It really does. Suggests good efficiency, maybe some pricing power, definitely puts them in a strong position. And, that flowed through to the bottom line, too.
Right, the net profit.
Yeah, net profit for Q4 was 157.6 crores. And that's up a very strong 36.3% year on year.
Okay, so a solid quarter. How did the full year stack up? Did that trend continue?
Oh, yeah. The full fiscal year, FY25, looks even stronger in some ways. Operating revenue for the whole year was 11,419 crores. That's up 9.5% from the previous year.
Okay, so slightly faster revenue growth for the full year compared to just Q4.
Correct. But again, the profitability story is quite stark. Operating EBITDA for the full year surged 54.9%.
Yeah?
Almost 55%.
Whoa.
Yeah. Reached 3,354 crores. And that big jump pushed the full-year EBITDA margin up to 29.4%. That's an improvement of 861 basis points.
8.6 percentage points higher margin for the entire year. That's substantial.
It really is. And the net profit for the full year reflects that too. It came in at 5,842 crores, which is, get this, up 61% compared to FY24.
61% increase in net profit. Okay, so they're clearly doing something right on the profitability front. What's driving that? Is it just the revenue growth, or is cost control a big part of it?
It seems to be both. The documents mention, top-line growth and cost efficiencies. And looking at Q4 specifically, their operating expenses only went up 1.7% year on year.
Only 1.7%, while revenue grew 7%.
Exactly. That kind of discipline on the cost side while still growing the top line. That's how you get that margin expansion we talked about.
Makes sense. What about things like advertising? Sometimes companies spend a lot there when they're growing.
Well, in Q4, the ad spend was around 7.2 crores.
Yeah.
Seems pretty controlled. But here's something interesting on the income side. Their other income.
Oh, okay. What about it?
It jumped quite significantly in Q4, 108.7 crores. That's up 19% from last year's Q4, and actually up over 40% just from the previous quarter, Q3.
40% quarter on quarter. What drove that?
They attributed it mainly to a decline in bond yields and just higher income from their treasury operations, basically making good money on their cash and investments.
Huh. So a decent chunk of their income, especially that quarterly boost, came from financial activities, not just their core business operations.
Precisely. And they do have a lot of cash and investments, over 5,200 crores as of March 31st. That was up about 14% year on year, too.
So that treasury income is definitely padding the bottom line. It's good income, but maybe less predictable than core operating profit.
That's the potential catch, yeah. It adds a layer of market dependency, something investors probably keep an eye on.
Right. Another factor affecting net profit is usually tax. Anything notable there?
Yes, actually. Their effective tax rate was quite low. For Q4, it was 12.2%, and for the full year, it averaged out to 12%.
12%? That seems low.
It is. And the reason given was partly a reversal of deferred tax. It's a bit technical, but essentially an accounting adjustment related to past taxes that provided a benefit in this period.
Okay, so sort of a one-time or periodic boost to the net profit figures from the tax line.
Yeah, contributed to those strong net profit growth numbers.
Got it. So strong revenue, even stronger profit growth driven by cost control, a big bump from Treasury income, and a lower tax rate. That seems to cover the main financial drivers. What about the business itself? Users, listings, how's that looking?
Pretty healthy on the user side. Quarterly unique visitors in Q4 hit 191.3 million. That's up almost 12% year on year.
Nearly 200 million unique visitors in a quarter. And where are they coming from? Still mostly mobile.
Overwhelmingly, almost 87% from mobile. Desktop PC is about 10.5%, and voice is a small slice at 2.6%.
Okay, and app downloads.
Also growing steadily, reached 39.9 million total downloads, up about 9.4% year on year. So good engagement and reach there.
And the businesses listing on the platform, the supply side.
That's growing too. Total active listings reached 48.8 million at the end of the year. That's up about 12% year on year.
Almost 50 million listings. Wow.
Yeah, and they added a net of about 1.2 million listings just in Q4. They're also adding more detail, like geocoding more listings, up 15%, and adding way more images, up over 20%.
Making the directory richer, more useful.
Exactly. Oh, and active paid campaigns were also up, about 5.1% year on year, hitting over 613,000.
So businesses are still paying for visibility. Now, I thought I saw a note somewhere that the number of new listings added in Q4 was actually lower than the year before.
Good catch. Yes, that's true. They added 1.2 million net listings in Q4 FY25, whereas in Q4 FY24 they added about 1.9 million.
Any cause for concern there? Slowdown in attracting new businesses?
Something to note, could be a slight deceleration, yeah. Or it could also mean they're maybe focusing more on the quality of listings or engaging deeper with existing ones rather than just pure volume growth. With a base that large, the rate of new additions might naturally slow a bit.
Fair point. Okay, shifting gears a bit. We know Just Dial isn't just a simple search engine anymore. How do these results tie into their bigger strategic picture?
Well, they definitely talk a lot about the evolution of the JD app. They're positioning it as an all-in-one app.
All in one? What does that mean in practice?
They're integrating more features, things like map-based searching, live TV, videos, even stock quotes. The idea seems to be to make the app stickier, give people more reasons to open it and stay longer.
Trying to be more central to the user's daily digital life? Makes sense. And what about the B2B side, JD Mart?
That's still clearly a major strategic focus. They frame it as a marketplace connecting manufacturers, distributors, wholesalers, retailers, especially targeting those MSMEs, the small and medium businesses.
Helping them get online, trade online.
Exactly. It's part of their broader push to become more transaction-oriented, not just generating leads, but actually facilitating the buying and selling.
That's a pretty big shift from their origins.
It is. And alongside JD Mart, they're offering other tools for these SMEs, like helping them build websites, mobile sites, accept digital payments through JD Pay.
JD Pay, right. Their own payment solution.
Yep, plus tools for managing reviews, getting ratings, enhancing their online visibility. It's sort of a whole suite of digital enablement for small businesses.
So a comprehensive package trying to lock businesses into their ecosystem.
That seems to be the goal, yes.
Yeah.
Build that network effect on both the consumer and business sides.
Okay. And just to check the box, the auditors were happy with all these numbers.
Yep. Deloitte Haskins and Sells gave an unmodified opinion on the full-year audited results. That's a clean bill of health, basically saying the financials present a true and fair view.
Good. No red flags there.
And their limited review of the unaudited Q4 numbers didn't find any material misstatements either, so the numbers seem solid.
Okay, so pulling it all together then, if you had to summarize the key story here, what would it be?
I'd say it's a story of really strong financial execution at FY25. Good revenue growth, but outstanding profitability improvement driven by efficiency and, well, that helpful boost from other income. And strategically, they're clearly pushing beyond traditional search, trying to build this broader platform with the all-in-one app concept and the big bet on B2B with JD Mart and related services. User and listing growth looks generally healthy, despite that slight nuance on the net additions rate.
Right. Was there anything in all that data that genuinely surprised you or stood out as particularly interesting?
I think, honestly, the sheer size of the other income contribution, especially from the Treasury side, it just highlights how much their large cash balance is impacting the bottom line right now. It's not just about the core operations anymore. Their financial management is a significant performance driver.
Yeah, that's a really interesting point. A strength, but also maybe a different kind of risk profile.
Could be, yeah. Depends on how those investments perform going forward.
Okay, so final thought then. As Just Dial keeps moving down this path, from search to transactions, B2B, payments, this whole all-in-one idea, what's the big question listeners should maybe ponder?
I think the key question is about focus and competition. As they expand into all these different areas, B2B marketplace, payments, content,
Mm-hmm.
how does that affect their core search business? Does it strengthen it through synergies? Or does it risk diluting their focus?
And does it open them up to new competitors in each of those spaces?
Exactly. They're moving from being the big fish in the local search pond to swimming in several larger, potentially more competitive oceans.
Hmm.
How they navigate that transition, manage those different business lines, and compete effectively across the board. That's going to be critical for their long-term success, I think.
That's a great point to leave things on. Lots to watch with Just Dial's evolution. Thanks for breaking all that down.
My pleasure.
And for everyone listening, hopefully that gives you a much clearer picture of Just Dial's recent journey and where it might be headed. Until next time, stay curious.